Good morning, Predicted Trades family. Hope everybody's doing well. It's Thursday, April 27th, almost the end of the month. And we've had our reversion to the mean. That's going to be the topic for today's prep. If we look left to see how we got here, we've had a nice run up from 4,000 in the last 2 weeks. I'm on a 20-day chart. Nice run up from 4,000 back up above this 4132, even up to this 4180, 4200, which has been a big key point of resistance. If we take a quick look at the daily chart, the last few drives stopped at about 4180, and we were back here again. For the last couple of weeks in prep, I've been talking about the run up to 4180, the slow down and resistance to get through, and then the potential for a reversion to the mean. We had a very strong April, right? In fact, if you go back weeks ago on my preps, I talked about a strong run in April, coming into big tech earnings, into bank earnings, that would get us back up to this 4180, where we'd sit and resist, and then start to potentially revert to the mean, the daily 21, which is up here, and then either we hold the mean and keep the march going, or we revert a little harder to the daily 50 or the daily 200. If we zoom in again on the daily, we've been setting progressively higher lows, and I've been talking about, as we approach this 4180, a reset back to the daily 50 or the daily 200 still holds a bullish structure if we reverse there and establish yet again higher lows. I talked about how in April we don't have any FOMC, but we do right at the beginning of May. So how we could have this April run up that pretty much started back after the contract changeover in March, the quad witch, right? They dropped it back for the change in contracts, run it right back up, and into big tech earnings, into banks and whatnot. And earnings has been going pretty decent for banks, for big tech that is reported, and basically the market is absorbing all of that good reaction, and also we're seeing some profit taking after this run up. So they're rotating out of some assets, rotating into some assets, and we can get an overall reversion to the mean while names are still remaining strong. So we're going to take a look at that as we go through our names. But overall, right now, we're in between the daily 21 and the daily 50. We've reverted through the mean, and we also have a big old daily squeeze bottom that we've arrived at, just in time for that daily 50. So in my preps, I've been talking about how we can pull back, hold up here, and still remain strong. If you look in the last sell-off, we had two strong pops right up to 40.55-ish, right? And you could even say up to 40.80. So this 40.55 to 40.80 used to be resistance. We got back through. We have to see, is it going to be support this time to reverse us back up and remain very bullish. And even still, if we lose it, we know the next target, the daily 200, right near 4,000, where we just came from a couple of weeks ago, and holding up there is still a bullish scenario. Higher lows, we're running into we're running into a sell wall, and we're setting higher lows. We see this every day on, an intraday time frame. And eventually we chew through the sellers here and start to take off. And we've slowly been dragging our moving averages closer and closer to that sell wall. The daily 200 has flipped to an rising, right? So all in all, we see some selling, but we have been talking about it for weeks, so we should be prepared for that selling. And while you look around, the Twitterverse and everyone says, all right, back to 3,500 or whatever at this point, we know that there are at least some bullish signs that if we hold around here, just like we rejected around here, we can start to build another long thesis. So, what is very interesting is this daily squeeze. Had it have formed, let's say down here, I'd have said, all right, we're probably going to that daily 200. Daily squeeze is way down here, yada yada. But it formed right around our daily 50. In just a couple of days, we tagged it, and we're bouncing. And I drew this yesterday. We didn't have prep, but I at least dropped some notes in our Discord. Drew the zone off the previous day's lows. And you can see, we fell through it, got back above it, looked like we were about to break out, and then fell through it again. Now we're back at it. So, kind of sets us up if we hold here into open, which we likely won't because we do have some economic data dropping today. So before I get ahead of myself and start talking about what scenarios, let's pull up the economic calendar. Because today's the big one. GDP, jobless claims. GDP, direct reflection of inflation and how things are going. So, going to be a big one. And then tomorrow we have PCE. Some consumer sentiment. We got a whole bunch of data coming out tomorrow. So, with that in mind, we want to, a lot of the scenarios that I'm about to explain, around 8:30, that could likely change. But I'm going to at least give scenarios that will involve reaction, right? And then next week, just looking ahead, it'll be the new month, and we'll have FOMC. And we'll know if we're getting another rate increase, language around if they're going to pause, anything like that, going to be a big one. So, do I think we're just going to tear through this daily squeeze, the daily 50, and keep tanking this week? Likely not. I think the market's going to try to absorb GDP, PCE, start to hedge into FOMC, right? Just like we, dropped on Tuesday, had great tech earnings, absorbed, right? The market didn't just reverse back up. And then we sold a little more. And then we had Meta report, great tech earnings again. And we're just right back up in this area to absorb the big earnings releases and the big econ data that's coming. So let's see if we can settle in here in an area of consolidation while we absorb these data releases and going into FOMC. Frankly, I think now that we fell out of the range that we were in during OPEX last week, right, monthly expiration, we just sat in a range while they cycled in, or, rotated in and out from last month's expiration to next month's expiration. And now we've broken that range and fallen down between the daily 50, daily 21. So we could stay in this range for the remainder of the week as we absorb the data today and tomorrow and the rest of the earnings, right? We got Amazon today after the bell. we still have some big names to report. And then going into next week, we'll have FOMC and even more names reporting. So, as I kind of point here, it's worth looking left over at this chart, right? The daily 50s right around here. It's where a lot of highs were running in and falling back. We have to see, now that this daily squeeze has come up to support us, and all of our moving averages have flipped into rising and ready to support us, can we hold right in this zone, reverse back up after this week and likely into FOMC, right? I'm expecting some consolidation. We had accumulation, we had some consolidation, we're having a little distribution where they're rotating out, taking profit, bringing it back. Let's see if we can get into some consolidation in this zone and hold this daily squeeze bottom going into FOMC. As long as we hear what we want to hear going into or coming out of FOMC, we could hold, reverse back up, finally take out this sell wall and start another strong drive. Or we don't like what we hear at FOMC, we're sitting at this squeeze bottom, and then we dump it to get back down to this daily 200 after FOMC. So just trying to give you some scenarios and some timing around it with all that we have going on. So, I guess one last thing before I move away from the topic of reversion to the mean. Sorry, just loading up our Beast tool, and wanted to talk to the last few days, because I was talking about reversion to the mean since last week, and going into this week, we got it, so. And sorry, I did want to add a few more days. Excuse me. Good old spring. The weather is oscillating much like the market, and when it goes from, high 30s one day to high 60s the next, to 80 the next, and then back to 40s, it's messing with me. So, if we go back and just look at, OPEX week, we were holding above that 41.32, which was POC, and we, just kept getting near it and bouncing up, and getting near it and bouncing up. Like, we don't need POC. We want to take off and run to the moon. And this is, last week I was talking about holding up here in this zone. The mean's coming up to meet us. We'll get a reversion to the mean, most likely. Here, I gotta actually scrunch it up a little bit to show that the mean is right here, right? And as we were sitting in that OPEX week, in that range, the mean just came up closer and closer and closer to POC. POC was 41.31-ish. I'm just calling it 41.32 to make it easy. And the mean arrived here at about 41.25, creating a zone of support that we kept getting near, but then acting like we're taking off to the moon. So we didn't touch POC or the mean last week, and then coming into this week, we tried to remain strong again. We don't need the mean, we don't need POC, we're going to the moon. And then we drop right back, find some support, repeat last week's oscillation in this range, and then coming into Tuesday, the tone shifted, right? We had that gap down, getting close to the mean. You know, at open on Tuesday, we were talking about calls and puts, and I'm like, guys, that mean is so close, we need to be ready for down day. And we got the down, straight into the mean, bounce up to POC, back down to the mean, and it did not hold. And I said, if the mean doesn't hold, we're likely going straight to 4,100. Just talking about the scenarios that I always lay out in prep, right? On Tuesday's prep, go back and watch it. I was like, the mean's right here, folks. We're likely going to get down and test it. It's right in our buy zone. Either it holds and we reverse back up. We've gotten our reversion of the mean, and we are going to try to get through 4,180. Or we give up the mean, and it's back to 4,100. And that's what we got. Then coming into yesterday, it was, can we hold 4,100 and try to get going again, or are we going to go back down? Talked about 4080. Well, we didn't have prep yesterday. 4080 used to be POC back in, I want to say, March at one point. 4080 is a big level. You know, we got down to pretty much to it early in the day. Big old bounce back up like we're going to take off. And then reversed right off open on ES, back down. Through it again, 4080, and just selling off, you know. Once you get a good sell-off going, the momentum can just carry it. And then we're right back up at this 4,100. So, enough a review. I just wanted to at least talk about reversion to the mean. Been talking about it for days. The mean came up to meet us right near POC. We act like we don't need it, and we keep looking like we want to take off. And then when it's just so close and within reach, we got to go tap it. And it's a very quick, we got to hold once, twice, W pattern takeoff. Or you give out straight down. So it's always good, you know, some of the new folks in the room or just anybody, when you see stuff like this happen and you're like, why is it happening? Why are we selling off? Yada, yada, yada. It's always good to go back and just think about how it played out. I try to lay out a thesis every morning in each direction, and if you go back and watch some of those preps, it'll be like, oh yeah, he was talking about this, and here it is, we got it. And that's what we're trying to do as traders. We're trying to, you know, not predict. I mean, it is our name, right? Predicted. But we're trying to anticipate. We're trying to use all of our experience and understanding of how price action moves and how important levels are, and yada yada. Anyway, enough of that. Let's get down to where are we going today. And I want to go back to my normal prep settings rather than this very low time frame. So, like I said, we're down at the bottom of a daily squeeze. I think we are between the daily 50, daily 21. Likely, this is the range that has been set. Range. One last thing I wanted to say, range. Take a look back at this oscillation from Friday of a couple of weeks ago, right? 4180 down to 4140. Stayed in that range, right? And then look at last Thursday. 4136, 4170, 2 inside days holding that, right? And then we open right at the bottom, actually gapping down under and then opening right at the bottom. So it's always good to think about ranges, especially previous day's ranges versus today, right? Like this range from last Thursday set us up for 2 inside days and then opening underneath the range. We gotta recognize those signs, right? So look at yesterday's range, 4110 down to that 4068. Likely, we're about to set up for some inside days. We have Amazon reporting today. We have GDP. Let's talk about GDP reaction. We are in a downtrend. We'll have to see how the numbers come out, right? But no matter what the numbers say, I'm not going to be shocked for a quick reaction down to get this daily 50 to extend our range a little bit to the downside, and then stay inside that range. Whatever the reaction wick low is, we want to watch that if it is a down reaction. So I wouldn't be shocked for a quick reaction down here, set the low, open in between, and then we stay in that range while they test that low and build a long, if that's the scenario that plays out, or keep trying to get going and building more of a, running into sell walls and building more of a short position. So, overall, let's see how this reaction goes. It could be quick wick down, something like 40.80, right back up, and starting to push before we open. And in that case, we still just want to remember range from yesterday, right? So even if we start to look good and the reaction is good and we're just going to take off, we always want to be ready for that quick, or for, balancing that pullback to this zone, to that 40.80 that we got down and held, fell through, the overall overnight stayed above it. So, those are at least what I could see as potential reactions where quick wick down and we're starting to push, or we have some stronger candles down, we get that daily 50, and then we open in between pretty much down near yesterday's lows. So just to confuse folks and to oscillate in that range where it will, if we get the scenario, it will likely open, wait for a while, start to wedge, start to look like it's going, then drop, start to look like it's going to just tank and then reverse, and we'll get some oscillation down here if that's the reaction scenario. So let's see how holding 40.80, yesterday's lows near 40.70 go. If those give out, it'll be straight to 40.53, 40.50 to hit and potentially overswing that daily 50 a little bit. We have this squeeze bottom all in this range. So wouldn't be surprised for some chopping in this zone before any kind of taking off back to the mean. And we never know, GDP could be amazing and start to spell the signs of inflation's coming down and everything, and no recession, all these things. And the reaction could be that we just take off through 4110 and we're hitting these moving averages and we pull back and we're opening near 4110. And then it'll be, can we hold 4100, get through these moving averages back to 4132? Or do we give out 4100 and we're coming back to sit at this daily squeeze bottom? Just all likely scenarios for this reaction, since I am getting prep out a little early today. But we've got our moving averages above as upside targets if we can get through 4100, 4110, yesterday's highs, break out of this range. We've got yesterday's lows, 40.80, this daily squeeze bottom, and if we start to lose it, down to 40.53 and 40.50. And, you could even say some overswing down to 40.25. As far as like a daily wick, it's acceptable as long as we close above 40.55. Otherwise, we'd be losing the daily 50, squeeze bottom on the daily, and firing down into the daily 200. But I don't really foresee that happening this week. What can happen with this daily squeeze bottom being thick is that we get down, we wick a little outside of it, we close back up, and we hold it before any kind of full firing down. So, that's enough on ES. Let's start digging through all the other names and wrap up this prep. In NQ, same scenario, fell down below the means, below the daily 21, which sits right at 13,000. We have the daily squeeze bottom, nice and thick below, ranging from 12,750 up to 12,900. Tons of support here for tech. And we have key levels that we are holding. We got down to that 12,800. I said this is a huge level of support. And we bounce right back up to 13,000. Higher low, back to 13,000. So, watch the range from yesterday. As long as we can hold that low right around 12,900. Looks like the low is down to about 860. As long as we can hold there, we can keep trying to get back up to this daily 21, the top of some lower time frame squeezes, and start to push back into them to fire back up. But like I said on ES, we could likely stay in this range between 13,000 and 12,800 for the rest of the week as we absorb this econ data. It can set up for an end of week pop to get us back up into FOMC, or we could continue to remain down in this zone. So, let's see on NQ today. We do have, about 1 and 2 hour squeezes sitting right at the daily 21, daily 8. We'll see how the reaction to GDP goes. It could get us trying to push off, up into the squeeze and push off of these. Pre-market opening near these where it looks like we're about to take off. We get a pullback to something like this 960 before heading higher. Or we could get a reaction where we fall below 960. We're rejecting it to come back down and test lows. So that's your range. We got targets to the downside. We've got our moving averages above. On to ready. Also with the daily squeeze bottom, already down to below the first Keltner, and we have that second Keltner down below. So ready will be a good gauge today for if we're going to see further drop, if the ES will get down to the daily 50. We might see it very early in ready. If it can't hold, say this 1733, 1735, 2-point range. If it can't hold that and starts to give out and drop below 1730 to get down and hit this second Keltner to the downside at 1722, we're likely going to be seeing ES drop down and get that daily 50 and fully engage it. But if ready can hold that little 2-point zone and start to get through 1745, then it's a fight back to that 1750. Yesterday's highs near 1756 to try to get through 1760 up to 1770 where the daily 8 sits. That's just for any kind of upside or a strong rally after GDP today. YM. For YM, we've gotten down to a zone that I have drawn from time past. No need to go back and hunt it, but overall, it's a zone of support. We have been above it for a while, and now we've arrived back to it. So, can we hold 33,400? Yesterday's lows near 350. 50-point zone of support. You could even say it extends up to 450. So 350 to 450, can we hold that today? Try to get back above 500 and get back up to the daily 21. Back up to the highs from yesterday's range. If we can't get going through 500, 600, rejecting that trend line, and we start to give out that 400, 350, then it will be YM also getting down to the bottom of its daily squeeze and the daily 50. Down near 33,180 to 33,250. So a little zone down there. If we can't hold up and we take out yesterday's lows, YM could engage the squeeze bottom in the daily 50. So a lot of things lining up on all indices. Daily squeeze bottoms, daily 50s. Very interesting. We have not had that the last few times that we ran into that sell wall and then started to come back. It's happened so dramatically that daily squeezes couldn't set in. So just very interesting. Apple. Let's burn through these names. Come on, toss, don't go slow. We've got squeezes on all time frames. The daily sits down near 159, and we've got kilo about 159.5. So that's overall target should Apple start to give out. Apple doesn't report this week, they report next week. So going into Apple's earning, it's all about can we hold the mean. 162.5, 163. That starts to give out at any point going into earnings. If the market slips, yada yada, we know that Apple will depart from this daily 21, come down to 160, 159.5. The daily squeeze bottom. The daily 50 sits around 157.5. Those are targets for this overall tight squeeze, should it break down. But if we could hold 162.5, 163, the daily mean, these squeeze bottoms going into earnings next week with all of our econ data and FOMC, yada yada. As long as we can hold up at this point through all that, we could see a reaction where we take back off, getting through recent highs, getting up to that squeeze top. We are ultimately in the middle of a daily squeeze, the middle being the daily 21. In the middle of this daily squeeze, with all of our daily moving averages in a tight squeeze. I wouldn't be expecting Apple to do anything too crazy. It will follow the market, but it's kind of parking itself, getting ready for earnings. AMD. I mean, overall, chips held up really well yesterday compared to the market setting new lows and whatnot, right? Made a nice drive early in the day, just faded back, but held up. Overall, let's see if we can hold 85, 84.5. That's the zone of support right now. Should we start to lose 86, looking for that to hold. We could also just hold 86, start to push back through 87 up to the daily 8 at 87.8, the daily 50 at 88.5. We do have this trend line that I drew that has been rejecting us, which sits around 87.5-ish. So let's see if we can hold 86 or this zone below, and if we can get back up through 87.5 to get back to some of these moving averages above. If we start to lose 84.5, back down to that low 83.65, and then down to 83.82. Amazon going to report today after earning or after the bell. Oh, and good morning to the couple of people that did tune in and that are watching live. I didn't really expect anybody. I was up early, so I thought I'd just get prep out early and have everybody ready. Amazon. In between the daily 21 and the daily 200. One of the names that has been below its daily 200 and has arrived to it coming into earnings. Overall, we've got a 4-hour squeeze. We've got earnings after the bell. And we have this range from that reaction to Microsoft Google earnings, right? So likely going to stay in this range from yesterday, from that earnings reaction high up near 108.5. So if we get up near 108.5, 109, I'd be careful of any longs up there. Likely going to fall back to the daily 200 near 107. Should that give out, then it's back down near yesterday's lows near 105. And that daily 8, 104 in the bottom of the 4-hour squeeze. And then we'll see how that earnings reaction goes. If it's negative, likely going to depart below the daily 21 and come down to the daily 50, bottom of the daily squeeze, just like the market. If the reaction's good, like maybe a wick down to the 21, and then a wick above 110. And let's just see. Third Keltner sits up near 112. If I had to guess, just in the sense of balancing in big tech, I wouldn't be surprised, even if the numbers come out good, we see a negative reaction just to get Amazon back near this price of 198, the daily 50, yada yada, and then a quick reaction back up. As long as the market holds squeeze bottoms and whatnot, we have to think like big money's pulling the market back. And as names report, they might just pull it back to a same scenario and then run it all up again and repeat the trade that they just did going into earnings. As long as earnings are, decent. So that's it for Amazon. We'll see how earnings go. Googly. Like, this could kind of be the reaction I'm talking about on Amazon, in a way. Daily squeeze, Keltners, daily moving averages, big reaction. Park it, bring it down near the lows, or hold it, and then take off, after we get through GDP, FOMC, yada yada. So, googly, below the daily 21. Could be opening in a similar spot. We'll see how the data drop goes and whatnot. 103, key level, at the bottom of that 4-hour squeeze, below that. Down to 101, that earnings wick low, our next key level, and that daily 200 near 101.5, and psych level 100 at the bottom of a daily squeeze. So boom, 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 number of targets, 103 gives out, likely coming down for them to build a position off that earnings wick, off the daily 200, off the daily squeeze bottom, to repeat the trade back up to that earning wick high. Range has been set. So, let's see what we get. If we get through 104, it's up to 105, 106, those daily moving averages. Top of the squeeze, and then 107.5, and then a 110. Moving on. Meta. Meta. 233. Sheesh. Congrats to those that swung Meta. So like I said with Amazon, if we get a strong reaction, why did I mark where third Keltner was? Because this is what a strong reaction will do. It'll go through third Keltner and sit up here. Everyone will lock in their profit, and then we'll start dropping back, right? So, great reaction on Meta. Definitely part of the market being up this morning. We want to keep an eye on something like 230. 230 gives out, coming back to 225. It will put downward pressure on the market as they take profit, unless they're buying other things, right? Like Microsoft, Google, that already reported. So, keep an eye out for rotation. Usually, can we see rotation within XLC where they're taking profit on Meta as they're buying Google? It can happen, but any downward pressure from Meta will also impact Google a little bit. So, likely. Anyway, let's see if 230 can hold, and then can we get through that 236 up to 240 on this reaction to earnings. 230 gives out, back to 225, 222 and a half, 220, recent highs. Microsoft. I know some folks swung Microsoft and locked up profit yesterday. I know that some folks held a little bit, I believe. Yeah, if I remember. So let's look at Microsoft, right? Great reaction, and they brought it back a little, and then they kept it. Could be the same scenario for Meta today. Meta could just take right off and keep going, right? We need to be ready for scenarios and think about them and draw lines in the sand, right? We got up through 300. We opened, where is open? Somewhere around 296. So it's like, can we hold 294? Pick something, a line in the sand, that pre-market low. Of course, we come down, we lose it for a sec, and then we're pushing off of it all day. So today, can we hold 294? That gives out yesterday's low, 292 and a half-ish, and then down to 290 and a half, 290. We do have that squeeze bottom to give us some support. If we can hold and reverse off that squeeze bottom, then can we get through 296 and a half, back up to yesterday's highs around 299, 300, top of that squeeze, and then up to earnings high 302, 303.2, and Keltner up at 305.75. Netflix. Another good example. Another good example because Netflix gave a wick, but now we're just holding that first Keltner to the downside. We set that post-earnings wick around 315. We want to watch that. Should we start to give out 316, 315, then it is going to spell down to test the bottom of this wick. So it'll be down to 307 and a half, 305, and then 300. And then that wick, as the daily 200, is coming up to meet it. Just talking about kind of more macro view on Netflix and how to deal with post-earnings. The post-earnings low wick is very important. So as long as we can hold 315, 316, they are trying to build a position here, potentially along, to get back through the daily moving averages, back above 335, 340, to start the march again to 350, 360, top of that daily squeeze. Daily squeeze bottom at that 315 as well. So should that give out, the momentum is going to carry us down to likely test the bottom of this earnings wick and that daily 200. Just all scenarios we want to think about on Netflix. Moving on, NVIDIA. They report at the end of May, if I remember, yeah. Range. So we set that low on Tuesday down near 262. Got back above it and have held these recent lows at 266. So as long as we can hold, and now our squeeze bottom, 266 near these recent lows, you should probably be thinking more 267, but now I would accept down to 266 to tag that squeeze bottom. That's where support sits. I know that I'm pointing down here and the video is way up there, but we're at a squeeze top, right? So you want to get ready for a scenario of rejecting squeeze top, coming back into yesterday's range, and if we can't hold the lows, back to the daily 21 and squeeze bottom. So, looking strong pre-market near yesterday's highs. We might just get a little push higher and then a reversal back to set a new base, potentially at these, potentially around 270, 269 and a half, where the daily 8, daily 15 sit. Should that give out, then it's back to the daily 21 squeeze bottom. But if it can hold, On a pullback to that 270, then it's back up to pre-market high, squeeze top, and trying to push up to 276. QQQ. Oh, and we have Intel after the bell today. I'm just remembering. So, NVIDIA and AMD could be sympathy plays off of Intel. So QQQ got down near that 309 and a half. Remember range, folks. The low's been set down here. Looking strong pre-market off of tech, obviously strong. So 315 kind of resistance at the squeeze top up to 316.25. So we could see a quick pop up here. Tag the daily 15 at 316.25, 316. And then reverse because we are in the squeeze tops and come back to 315, 314 and a half. We could have that data drop in tech reverse back down, and we'd be opening lower. Overall support down near that 311 and a half, 312 at squeeze bottom. Should that give out, then we're going to test the bottom or the bottom of the range, right? I talked about range. This low is down here near 309.8, 309 and a half at the daily squeeze bottom. So we need to be ready in this downtrend for rejections and getting down to daily squeeze bottom. On QQQ, the daily 50 sits again just below that daily squeeze bottom. So we do have targets should we get continuation to the downside. If we can hold that 312 on any pullbacks and start to reverse back up, then it's targeting back up to 314, 315, 316. SPY. Yesterday's lows near 403.8, 404. That's where the bottom of the squeeze is, so that's the target if we do start to reverse to head back down. Let's see if we can get through. We got yesterday's highs near 407 and a half, 408 where the daily 21 sits. So it could be, depending on how the data drop goes, if we hold up here and open here, it could be a quick push up to tag those things and then pull back for a potential gap fill, since we are having a bit of a gap up. Obviously, we got to see how the data drop goes in a while, in an hour and a half-ish. So, overall, support down near 404, 405. If that starts to give out, then we're going to engage the daily 50. Down near 402 and a half, near key level 402.75. That's downside targets. Past that, we're talking down to 400 and a half, 400. Should we just continue to see strong selling, right? But somewhat expecting us to try to hold again near daily 50. We don't have our daily squeeze bottom because it's just starting to form on SPY. And to the upside, daily 21, daily 8, daily 15 as targets. Tesla. So, like I said on Tesla, negative reaction on earnings. We need to just leave this one alone. Yes, it is drifting lower, but they weren't giving much action the last few days. They gave one good drop yesterday. Do I think they're just going to keep tanking it? We're getting near third Keltner to the downside, which is starting to get near oversold. In my opinion, I just leave these things alone. When they have a negative reaction on earnings, are we drifting lower? Yes, but we're only $10 lower than the zone that we sold down to. 10, $15. It's not the easiest of trades. So overall, let's see if we can hold that third Keltner. 150, 153, little 3-point zone. Let's see if it can hold there. and start to reverse back up in the coming days. If it starts to give out 150, my next big key level will be down near 136 and a half. On to VIX. Tesla for me is adrift, and I will wait until it finds land. VIX, we got down near my key level, 16 and a half. And we've reversed back up above the daily moving averages. So if we are going to see more selling on the market and start to get down to daily squeeze bottoms and daily 50s for ES, YM, whichever's not there yet for individual names, then we're likely going to see VIX hold around 1775 up to 18. Right? We'll likely see VIX hold there. Start to take off again through 18.5, get back up to 19 and 20, where the top of a daily squeeze and the daily 50 sits. So for like all indices and individual names that still need to drop down to their daily 50 and daily squeeze bottom, we'll likely see VIX keep getting up to its daily squeeze top and daily 50. See how these things work? VIX is a good mirror of the market. Market's pulling back to daily 50. VIX is pulling up to daily 50. Squeeze top versus a squeeze bottom. Very, very cool how this stuff works out. So, if we're going to see more selling today, it'll be VIX holding here and starting to push right back up to these highs and up to 20 to engage that daily 50. But if we are going to maybe see a little push today after GDP and into Amazon and Intel earnings, then we'll likely see VIX start to give out around 18, that's 17.8, and come back down to 17.5-ish, and then 17, 16.5. But do I expect us, we're down to the daily squeeze bottom on the market, and you could say that maybe ES and YM need to go engage theirs a little more and get that daily 50. So I'm expecting a little bit more of a consolidation in VIX up here, just to get folks excited and thinking VIX is going from 20 back to 25. And that market would go from daily 50 down to daily 200. So, everything lining up very interesting. Let's see if VIX can stay under daily 50. Let's see if market can stay above daily 50. Otherwise, we're going to drop further. VIX is going to take off higher. But if we can reject on VIX and hold on the market, we might just see that rally continue. That's it for prep today. Thanks for tuning in, folks. Appreciate you all. Good luck today, and we'll see everybody in the chat. Oh yeah, it's a free Thursday. So if you're new to Predicted Trades, there's a link in the description of this YouTube video. You can join our Discord server for free, and you can test out our Beast tool on your options charts. That's right, we have a tool that we provide daily, which gives you critical levels on every options chart so that you know what prices to risk, long, short, play-in puts, play-in calls. We've got buy zones, sell zones on every option chart to try to help give you guidance for where big money and market makers might be loading into contracts. So, thanks for tuning in, folks. Good luck today. We'll see everyone in the chat.